There was a raft of economic data for the New Zealand economy out on Monday, and this does give us a pretty good indication of how the New Zealand economy was tracking prior to the earthquake last Tuesday. The New Zealand trade balance data indicated that we have seen an increase in exports, while imports still remain fairly subdued. This has flowed through to the terms of trade, which again indicates that dairy exports as well as meat exports have been pretty good over the past quarter, and the terms of trade is now up to historic highs in the fourth quarter of 2010. The other key information was consumer confidence, which did see a little bit of a pickup in February, although this was prior to the earthquake, so any changes from that may have some indications down the track. We still forecast that the New Zealand economy is going to stay relatively subdued right through to the middle part of 2011, but will start to pick up slightly towards the end of the year as we start to see some good news coming through from the Rugby World Cup, and we do start to see some reconstruction activity for the Canterbury area, although past experience does indicate that reconstruction does take longer than previously thought. The New Zealand dollar traded in a relatively tight range against the US dollar on Monday, with most of the news coming out around what the cost of the earthquake will be to the New Zealand government. Prime Minister John Key gave an indication that the total cost could be up to $20 billion, of which around $15 billion has been provisioned. Of course, this will have a key influence on government finances, and the credit rating agencies will be watching closely to see what the outcome and any stress on the New Zealand government fiscal policies and their fiscal position. This could have some influences on the currency down the track, but currently we continue to trade above 75 cents, and on Tuesday morning are currently trading at 75.20 against the US. Our outlook for land prices continues to look strong and will continue to be underpinned by low supplies around the world and also from here in New Zealand. Of some concern is the potential that we have seen through this year of slaughter of capital stock because prices have been good. Of course, this will have long-term influences on the industry and will also limit the increases in lamb supply that we will see over coming seasons. The UK market continues to look pretty good, but this is underpinned by low supplies as consumers are starting to pare back their consumption levels for lamb as prices are starting to increase. However, the market is going to be underpinned by low supply over the next few seasons, and this will be positive for prices, with no suggestion that we will see a dip in prices anytime soon.